You all can hear me okay. I think you did have a bit of an issue with the mic wire, but I think we're all good. Let me just get the screen up and then we'll be on our way. Today I want to talk about well, we have a Fed meeting today, so I do want to talk about that, what to expect depending on what gets said at 2 o'clock. I cannot stream around that time today, unfortunately. I might be able to make a quick update video later on in the day, just depends on what, but I think all the information you need to know will pretty much just be said now. So let's just get that out of the way. So today, the Fed is going to decide and announce how many basis points they're going to raise interest rates by. I have a video on that if you want to watch that, how that affects markets as a whole, if you want to learn more about that. But real simply, just today, we're expecting 100%, big banks are expecting 100%, at least 100% increase by 75 basis points, and a 33% chance of at least 100 basis points. So what does that mean? That means that if 75 basis points is the actual rate increase, then we're most likely going to pump. And if 100 basis points is the rate interest increase, then we're most likely going to dump. Why is that? Real simply, this is just based off of the fact that the real expected increase is not 75 and it's not 100, it's in between. So it's around 80. I didn't do the math, but it's around 80, 82. Excuse me. So 75 is lower than 80, so it's lower than the expected, so it'll pump. 100 is above the expected, so it will dump. So obviously this is also most probable situations. There's no definitive, but just real quick, that's what we're looking for. If you want my 2 cents, I'm kind of leaning towards 75 at this point. I think we'll get to the charts why, but yeah, that's just what to expect for the Fed meeting. All right, with that out of the way, let's just get into the charts. So it's been fairly boring, right? We had this target set out since last night. So today, while things are whiplashing during the meeting, right, don't really take positions during the meeting. I wouldn't suggest unless you have like a big macro target such as this one. Things will start to whipsaw around 2 o'clock, so just be careful of that. All right, we had this market break, which we talked about yesterday. We expected it to pull down into this. Actually, 30-minute chart was a bit better. Excuse me. Into the 705 Fibonacci retracement, plus this bullish order block. We actually did get a tap right into this bullish order block, and then continue to the upside, or continue ranging, sorry, because we did not break any of this. We still are within this daily swing failure pattern entry point, right? This is technically your technical point for swing failure pattern entry is between the close of the swing failure pattern candle plus the wick of the candle you created the swing failure pattern with, so the previous low. That is your technical entry. We're still in that entry point, so if you're trading on the daily term time frame, I wouldn't suggest using leverage at that point, or extremely low leverage. You're still within that range, so that's something to consider there. But I do think we're most likely during the meeting whipsaw majorly, and if we do jump down for whatever reason, whether it's the interest rates or possibly just because liquidity's down there, remember we're still waiting for the 705 Fibonacci retracement to get hit, so just be aware of that. Hello everyone. So there's not too much to talk about. I can turn on the TDI just to see if there is, but beyond that, just updates for the meeting and stuff like that. So hopefully if you are watching this, hopefully you're watching this before the meeting, so things of that nature don't occur. We do have possible, I was going to say bullish, no, never mind, ignore what I was just going to say. Let's take a look at the SPX now, and then we can jump into chart, and then we can jump into more crypto. Once again, we were looking for the 705 and bullish order block to hold, just like we are waiting for Bitcoin to actually come to that level. so far, wick below, close above, no problems there. Not even a 4-hour closure below, not even a 1-hour closure below. So we're all good there. Really small term time frames. We could treat this as a really small range. We came up and filled this gap, right? We don't expect too that big of moves before the meeting. So really just filling gaps. So don't get too concerned if the SPX comes and just retest this previous open, or sorry, close from yesterday, and then we can take it from there. If I were to get a guess, we're probably going to stay within this range of the value area, even when we whipsaw. So if we whipsaw at 2 o'clock, something like up and down, that's my guess. Obviously, try to avoid taking major positions during the meeting and stuff of that nature. But still, macro analysis still holds. Still think we're going to come back and not macro, but larger time frame swing failure pattern. Market structure still holds. I still think we're at least going to come back up into the $41,000 range. Cool. Or $4,100 range. Yeah. Okay. So now let's look at Ethereum versus Bitcoin and see if there's anything there that can lead us to conclude what we're talking about. Ethereum. I think Ethereum, we were basically saying, so we bounced off the point of control, came back to retest this previous gap right here. We're still expecting a retest of this market structure break line. Still haven't gotten that yet. So I would look for a retest of this line, then assuming we get back above it into there. So there's nothing major unless this divergence is forming, and there's not. So let's actually just look at Ethereum itself, because that did not give us much from yesterday. So Ethereum actually did play out its targets, our targets from yesterday, which is good to see. Let me just get rid of all these lines. I have to label this. This was our market structure break line. Cool. So we broke market structure, so it means that we're most likely to continue the upside, at least on smaller term time frames, right? Or in the 1-hour time frame. Daily still looking like there might be a little downside, so just be aware of that. But Ethereum played out perfectly. Okay, we broke market structure. We expect to pull back to the bullish order block plus the 705 Fibonacci retracement. Got that to the T, and now we're continuing to the upside. So it's good to see that at least is playing out. So I do expect, obviously, if things do whipsaw a lot and whipsaw to the downside first, this low might be taken, and that's fine. So just wait for the 786 to make it hit first, because that's just deep in the order block, and then look for like big bounce off of that. Obviously, depending on what the actual interest rate hike is. So just be wary of that this low might not hold when we whipsaw, but it is good to see that our targets did play out. Cool. Are there any coins you guys want me to look at? While you throw them in the chat, I will look at E-minis. Just for funsies. And we did actually get a bit of a market structure break here. Bang. That's at least interesting. So let's just see if ES itself has downside targets. Yeah, the ES still has a bit more downside to play out, to, I would say, 38, 33. So, oh no, actually, wait, didn't pull it correctly. Actually, no, got it to a T. So I take that back. It doesn't have downside targets anymore. Met our downside targets with the 705 Fibonacci retracement after this market structure break on the daily term time frame. Still waiting for that smaller term time frame bearish order block to get hit. So something along the lines of like this, which is actually also a retest, but we already got a retest of the market structure break right there. Would look kind of cool. Look like something we can easily trade using our tools. So Luna C and XRP. You got it. Luna C. Also just, yeah, just Luna C. BUSD. Okay, so Luna C still is yet to meet our targets. We did get a retest of this market structure break line. It's failed to get it back up. All right, so let's actually start from where we were. Sorry. So where we were, we can just get rid of our macro levels for now. Let me just hide them. Cool. So we had this market structure break on the 4-hour time frame, meaning that we're most likely going to turn to a downtrend. We broke it right after this closure right here, actually, where we expect to pull back into the last significant move up, which we identified right here, plus the 705 Fibonacci retracement level. So we look for this to be a target, assuming we can back above this market structure break line, which actually held as resistance right here, pretty much to a T. So that would have been a good short position to take right there. Could have taken some profit within this little range. Now, if we want to just take this as a range to see if we expect it to break up or break down, we can see once if there is bullish divergence. No divergences formed just yet. You did have divergence formed down here, but you already pretty much played that bounce out unless, yeah, you already hit your 618, so that bullish divergence pretty much played out there. So let's just take our, no heavy skew. I will label this as a low volume node. So if things do get nasty today, right? All depends on this Fed meeting. Then expect this level, this low volume node within this low range, 26.155 and 25.1 roughly, to get at least a small bounce at this low volume node. If we do break out of this range, which I don't really have a strong opinion of, remember that there's this big fair value gap down here between 18,787 and 17 roughly. So if we do break out of this range, closure basis, then on I would say 4-hour time frame, you use 1-hour time frame, whichever you feel comfortable with this coin. I don't personally trade this coin. Then look for fair value gap down there to get at least a small bounce as well. Cool. Hopefully that was of help. Yeah, I just don't have a strong opinion if it's going to break up or down. So there are your levels and invalidation. Right, get back above this. Expect a 705. If we stay in this range, look for this little bounce off the low volume node. If we break out of this range, closure basis, whatever time frame you want, then look for a bounce in this fair value gap. Hopefully that's some help. XRP, you got it. Okay. Daily time frame. Just get rid of these. We'll settle like a little channel there. Cool. So we can just continue our range right here. We actually broke out of this value area high, which is good to see. You can see that our bias actually did play out because we expect, right, when the point of control is that's the wrong tool. When our point of control is heavily skewed to the value area low, which it is here actually. Like if you might not look at visually, but when we zoom in and do a drawing and then compare this drawing to up here, it is pretty significantly skewed to the downside. So based off that skew, we do expect that there is a bit of a bias to at least break out of the value area high. Not necessarily break out of the range, we'll talk about that in just a minute, but at least break out of the value area high, which we have, and so that's good. So the question is this done? Like, is this upside move done? We killed these shorts that came out of the board of control. Basically, yeah, is this move done? We could take a look here. We did build bearish divergence, so right off the bat. That's number one. We did stop right at this daily support resistance level. Built bearish divergence on the 4 hour. Didn't build it on the 1 daily, which is interesting. But I will take the 4 hours like the side of here. We could take this as a market structure line right here. So any closures below 37 and 2 cents on the 4 hour time frame invalidates this upward trend on the 4 hour time frame and gets real nasty very quickly. 1 hour time frame, we just take a look here if there's anything to talk about on the 1 hour time frame. We do have this notable fair value gap below, which is actually below our market structure break, market structure line. So just be wary of that, right? You might, once again, closure basis, so wicks are fine. You might get a wick, like a real bad wick down here. That's also in line with the 0.5 Fibonacci level. So you might get a real bad wick down here on the 4 hour time frame and then close above. That's fine. Nothing's invalidated, or the uptrend is invalidated. So just watch that. You might also get, watch for divergences down here if you do get down there. I'm in short from 41 cents. Cool. Yeah, I would so the 4 hour time frame with bearish divergence, you would first expect, first of all, you actually have this fair value gap on the 4 hour time frame. I don't know why I missed that. Down here to 38.30. Let's just see if those 618 happens to line up with it. I have a feeling probably actually won't. You would look for like a slight bounce off the 618, which you're not even getting right here. Once again, closure basis. So this, I would essentially just look for the lows here. Everything right now I'm saying is fairly much with a caveat. If in 40 minutes the Fed comes out and says that they're doing a 0.75 base hike and they won't be hawkish anymore or whatever, I don't think that might be, I don't really think that'll be the case in terms of like they won't say they're hawkish anymore or whatever. Whatever the case may be, like if they come out and just say that they're gonna like soften up, then things are gonna move. Like all this TA pretty much goes out the window. But just based on this, I do think we're probably just gonna come back, retest these lows, if not swing fed, like sort of form or swing fed pattern kind of, to fill this fair value gap while also building bullish divergence. So just watch out for that. Cool. It seems that now people are joining the chat. I apologize. You all missed the beginning part. If there any other coin you guys want me to look at, just let me know. And just for the people that joined, I'm just going to go over it one more time so you don't have to watch back the video. For the Fed meeting, I'm going to give this real simply. 75 basis points, most likely going to pump. 100 basis points, most likely going to dump. The real expected interest rate hike for that the banks are expecting is somewhere between 80 and 82. I didn't do the math, but off the top of my head, it's between 80 and 82. And so if it's 75 basis points, that's lower than expected, it's going to pump. If it's 100 basis points, that's higher than expected, it's most likely going to dump. So yeah, that's just for the people that just joined. I see that as a jump in viewership. Cool. Any other coins you guys want me to look at? All right. If that is all, then I will wish you all goodbye. I will maybe get a little video out for the Fed meeting, just like a quick update, like just like I did the other day for the daily closure. If you've missed the beginning TA, I apologize. Just go back in the stream and rewatch it. Nothing has really changed in the last 20 minutes. So just go back and rewatch that. I hope you all have a great rest of your day. Thank you so much for joining. Once again, links in the description below for our Discord server, completely free. A lot of good trades in there. So go and join there. Also, if you trade on Bybit and you want decreased fees, 30% off all your fees, maker and taker. Links in the description below. Help support out the channel as well for transparency. So, yeah. Hope you all have a great rest of your day and take care. Bye, guys.